Alright, we might see an opportunity up here in the L period. We are breaking above the I period high back into the D and H period tail. There's not a lot of volume, so the cross trade is hard to pick up, but let's see if we can't get a position here. Alright, we made the 1317 high. Let's see if we can get a position in the 16s or 17 retest. Alright, let's take the 1675. So we are short 2 at 1675. Of course, our regular exit strategy, we're going to buy one at 1550, put our stop and break even. If we in fact retest the L period high and break above it, we have to be cognizant that the H period high is 22, about 5 handles above our short entry, and of course the D period high is about 24. So that's our observation. We haven't got filled on our 1550 yet. Click down to 16. We'll look to better our position if in fact we retest the L period high or approach the H period. We're going to spread our bettering of the positions in considering the volatility. We'll take 4-point intervals with this one. Typically I would take a 2-point interval, but we'll take a 4-point interval and look to better our position in the 20s, which is just around the H period high. See if we can't find some cross trade here in the high 19s or in the mid 20s. Sort of stalled out here in the 19s. See how it bounced up with just a couple hundred here, 100 there, 500 there, 600 here. Alright, there's some 14 cross trade. Let's take the 19 and a quarter. So we are short 2 more at 19 and a quarter. We'll give back the 1675s at the first opportunity, and also give back or take off the table one of the 19 and a quarters. So we will buy 2 at 1675. We'll buy 1 more back at 1675, and we'll buy 1 at our target. Our target is the mean's all the way down at 1309. So we're going to see if we can ride it down to the mean at 1309. That's our target. Of course, our stop is buy 1 at 1925 when we get filled at 1675. Okay, we just got filled at 1675, so we have 2 off at 1675 for break even. We have 1 off at 1675 for 16, 17, 18 for 2.5 points, and we put our stop in at 19 and a quarter. Now our target is 1309, which we're 6 handles away. We're ticking 1314. See, these intraday rotations today are extreme. They're happening, 6-7 point moves within a minute, 2 minutes, way quicker than normal action. We're at 1312 now. So we're going to stand tight. We have our stop at break even at 19 and a quarter, which is significantly higher than we are now. It would probably be better to put a trailing stop in. I probably would if in fact we weren't in a typical volatile market like we are today. So I'm going to stick here with our 1309. That is the point of control for the day. It's actually an even number, and that's the L period low. So I'm going to change that. I'm going to move it to a 1310, 1 point above the L period low, which is just a couple ticks above the point of control. So if people are looking at the point of control, I can get out before that happens, and we'll see if we can't maximize this trade. This could potentially give us a nice trade. We already have 2.5 points on the offset. We broke even on the first 2. We got 2.5 points on the second, and then we have 1 contract. If we ride it to 1310, that'll be a 9 and a quarter point trade. So that'll give us an 11.5, 12-point trade if we get filled at 1309, 1310. All right, 1309. We have our fill at 1310. It ticked 1309.50. Probably going to go down to 1309, maybe even lower. But we got our fill at 1310. That makes a 9 and a quarter point trade. So we're going to wrap this video and revisit Friday snippets and finish our production there, and start to work on our chart book for this evening, and then of course post our trades today. We didn't take a lot of trades. As you can see, the action today is quite volatile. You see price points where there's just no action on the bid, no action on the offer, and that makes for wild swings. For some, that would create a lot of opportunity. For for me, it seems that it creates more risk than opportunity, because after the fact you can see opportunity. During the fact, it's very challenging because the market's not following its typical course. Although still, if you find asymmetrical opportunities, you can lower your risk exposure. If you are trading anywhere within the point of control or the standard deviation, then of course you take on additional risk since there's not much liquidity in the market. So we did all right today. We have 9 1/4 points plus 2.5 points plus 1 1/4 points plus 1 1/4 points. So that's 5. That's probably the best day that we've traded thus so far, although we haven't traded much. But the trades that we did take were relatively asymmetrical in all the periods. We got the H period, the I period, the L period. We missed the D period. The H period in reflection was a very interesting trade. We were shorting right around the high of the H period. And of course we only made 1 1/4 ticks on that trade, but the market went from 22 all the way down to the H period low at 10. So that was a 12-point rotation. We did get back in twice on the H period high, although we didn't get back in the third time, and of course the third time was the time that it actually broke. So we pulled a little bit of trade there. I think overall our decision-making processes were accurate. We decided to sleep in a little bit, not get too overly anxious about the gap down, waited to see what happened. We'll review the activity at the end of the close to see exactly how much the market was bouncing in the A, B, and C and D periods. It was quite a rotation back from 1250s overnight to 1324s. That's almost a 75-point range. That's the biggest range I've ever seen in the S&P. And plus our chart books don't go back far enough to look at any reference points below just the recent Friday day's low. So overall, considering the lack of information and the volatility, I think it's another winning day.